Hi and welcome everyone to today's presentation of Empir Group. My name is Stefan Knutsson. I'm an equity analyst here at ABG Sundal Collier. And with me today I have Lars Save, CEO of Empir, and Torbjörn Skog, CEO of subsidiary Frontwalker. Welcome.
Thank you.
Thank you. Yes, my name is Lars Save. I'm the chairman of and the CEO of Empir Group since 2015. And we are chosen to present this year the group in the mother company and with the two operational subsidiary. So just to catch up with the group, we have two subsidiaries that we consolidate in the mother company. It's Upnode, application development, and the Frontwalker group, which is a consolidated group that Torbjörn is in charge of, and Torbjörn will explain in detail what we are doing there. And this minority holding here in a listed company called Exavitec has a special story that I will connect to later on this presentation. Very quickly, if you haven't studied our annual reports, the Upnode group and its subsidiaries in terms of development companies in application. Primarily, we have a quite big investment, and we are going into black numbers now after many years, and that is in the fleet management systems for operating a substantial number of cars in different kind of pool and share economy kind of applications. So, Torbjörn, the floor is yours.
Thank you. So today I'm going to tell you a little bit about Frontwalker Group. Frontwalker Group is an IT company. We have operations in Sundsvall, Uppsala, Stockholm, and Malmö. We're about 120 employees. We have about 130 million in sales and an operating margin of about 10 to 11%. Our offering can be divided into three parts. First, we have the traditional on-site consultancy service. This is where we have highly skilled IT professionals that we send out to our customers. So they're working together with the customer staff under supervision of the customer. And that is the traditional way of doing IT consultancy services, and our companies have been doing it for as long as they've been around. And it accounts for about 40% of our total business. Then we have something that I would like to describe as a full system maintenance offer. And that we do it the other way around. We keep our consultants at home in our offices, and we bring home the project or the system that we are maintaining for the client. So we're utilizing the same resources, but in a different way, which we believe have really strong merits both for the client and for ourselves. And I will talk a little bit more about the distinction between these two ways of providing IT services in a minute, because it has impacts also on our business model. Then finally, thirdly, we have something slightly different. We have we sell IT support services. That is, the manning or staffing of a client's IT support desk. So what we do is that we agree to man X number of chairs in the client's support desk. We pick the people and we send them over there. And it's a slightly different kind of business. Typically, the people that we deploy in this area, they are younger, less experienced than the IT or system development professionals. Although, of course, they have to be knowledgeable about IT and they have to be good problem solvers, but this is a service function. So it's really important that the people that we deploy here are able to provide a good service experience. We do this both on-site at the client and we do it remotely. And we do support for basic infrastructure. We do support for general PC, Windows, Office things. And we do also support for the proprietary applications at the clients. As I said, we believe there's a big and really important fundamental difference between these two ways of selling system development services that I just mentioned, the on-site consultancy and the full system maintenance offer. Traditionally, the companies in Frontwalker have been all about on-site consultancy, but as of late, we have been doing a sort of transition. We're trying to transition more and more business into the full system maintenance offer, because we believe it's a way of us to distinguish ourselves on the market with a competitive advantage. We believe it has some really strong benefits for the clients, and not the least for ourselves and for our business model. And if we would just dig a little deeper into this, we have on the left, we have the traditional on-site consultancy. That's about providing a resource. On the right-hand side, we have the full system maintenance offer and the IT support. That is about providing a service. And if we look at this and the differences between these two, first from a customer relationship perspective, you can say that in general, if you're an on-site consultant, you're a rather exchangeable, generic resource. The consultant is sent to the client. He stays there for a period of time. But when the contract is ended, he goes off to another client. And the next time this client wants a consultant, well, maybe you get the benefit of going there again, but might as well be someone else. The full system maintenance, on the other hand, then you tend to develop a really deep and strong bond with your client. You get to know the client's organization, its business, the systems, and so on. And you become a long-term, more strategic partner. Also, a quite important difference, when you do on-site consultants, there is often an intermediary between you as a supplier and the end client. That normally you don't have when you do the full system maintenance. You have direct access to the client. If we look at this from a pricing perspective or a cost perspective from the client's point of view, when you do on-site consultancy, price transparency is complete. It's 100%. It's just about you provide a resource that has an hourly rate. And competition is mainly on price, or price is really, really important, which of course is bad for business. The full system maintenance offer, that is a packaged offer. We do development projects, but we also supply a lot of other values for the customer. We have the availability, we have flexibility of resource, and we maintain knowledge about the client's system and business over time. We package this into an offer. Client normally pays a fixed fee, monthly fee. And the thing is that these extra values are not strictly interrelated to this limited resource of hours available in a day. So that allows us to have better margins in this kind of offer. And if we look at the perceived customer value and the basis for charging that we have, on-site consultancy is just time and materials. Number of hours spent at the client's office, that's what we can charge for. In the full system maintenance offer, well, we have all these values. We have the availability. The client can call anytime. We have the people at our office. They will be available with short notice. We have the flexibility. We can scale up or down resource utilization on a more or less weekly basis. We do the knowledge management of the system, and a lot of clients, they really appreciate all these values, and they're willing to pay for it. So much better customer value and a much better value proposition, we believe. Last but not least, the resources we are working with in this industry is a scarce resource. Skilled IT professionals are really, really difficult to get hold of. The problem when you do on-site consultancy is that the people, well, they don't only have to be skilled, they have to have documented merits on their CV. Because the CV is actually what's being sold. And if the consultant doesn't have 3 to 5 years of experience, the CV goes in the bin. On the other hand, when we do the work from our offices, then we take full responsibility of the delivery. So we can recruit junior talent as long as we can see that these people, they will be able to get the job done. We can recruit them. We can sit them next to a more senior person, and deploy them in our operations. And obviously, junior talents are, they doesn't cost as much as a senior consultants, but I think more importantly, they are available to a larger extent than more senior personnel. So it's a huge advantage when it comes to recruiting. If we take a quick look at our customer base, I would say it's quite diversified. About a quarter of our business is in the sector of e-health and life science. We have, for instance, a long-term customer that is the trade agency for the pharmaceutical industry in Sweden, Läkemedelsindustriföreningen. For them, we have built and we maintain the National Registry of Drugs, FASS. We have other clients there as well. We're also quite strong within the public sector. So we have, for instance, the Swedish Civil, what's it called, Myndigheten för samhällsskydd och beredskap. And we have the Swedish Company House and many other clients. And then in descending order, we have clients in retail, H&M and IKEA, for instance. We have clients in construction and heavy industry. We have clients in media, especially gaming, not gambling, but gaming, and so on and so on. And as you can imagine, when COVID hit, we felt quite fortunate that we had this structure of or this profile of our customer base, because so far most of our clients, they haven't suffered really bad from COVID, and of course that has been beneficial to us as well. And I come back to COVID at the end of my presentation. No single client counts for more than 15% of our total revenues. Top 5 clients combined make up for less than 50% of revenues. Top 10 less than 65%. So I'd say we are quite diversified. If we take a look at our organizational structure, I would say we are quite a decentralized company. So operations is run in independent daughter companies. So we have real decision power close to operations, close to the market. And then on top, centrally on group level, we provide functions that all daughter companies can benefit from, like administration, accounting. We have the resources and the competence about public procurement, and so on and so on. Also, we can coordinate the combined resources of the whole group so that we can take on larger commitments as a group. So in this way, we believe that we kind of get the best of 2 worlds. We have all the benefits all the benefits of a small company: the flexibility, the swiftness, the being close to market, being able to grow culture based on the people that are actually on site. On the other hand, we also have the benefits from belonging to a larger corporate group and the power that comes with that. So this is an Investors Day. And you're all investors, so I thought I would talk a little bit about the financial side of the business as well. End of 2019, the board of Frontwalker Group adopted the following strategy and financial targets. It was said that Frontwalker should mainly have an organic growth and maximizing profits and dividends. And I want to stress that it was mainly organic. Acquisitions is not at all ruled out, but focus is on maximizing profits and dividends. By the end of 2022, we should reach sales of 170 million and earnings before tax of about 20 million. And what we earn, we should pay in dividends to our owners. And that's one of the beauties with this business, that we tie up very, very little capital, so we can have a really generous dividend policy. Now, all this was, as I said, was end of 2019, and shortly thereafter, COVID hit. And what we've said is that COVID has raised significant, what do we say, uncertainty around the financial goals. But we still believe we are able to reach these goals, but we can't really tell how the odds of doing that, how much less favorable the odds are of actually succeeding. And at the time, it's really, really difficult to assess this situation. So until the market situation is stabilized and we will be able to assess the situation, we will not adjust these targets. The next slide is to give you a rough idea about our financial projection. Main takeaway here is that this is a stable company. We expect steady but moderate growth, mostly organic growth. But it's not a hockey stick, but it's a stable, profitable business. We have some uncertainty on top because of COVID, but we will still be profitable, and what we earn, we will pay in dividends to our owners. So finally, I guess we have to relate to COVID on an occasion like this. When COVID hit in January, we immediately realized that the immediate effects, the short-term effects on Frontwalker because of COVID would be limited, and that has turned out to be pretty accurate. I mean, we have noticeable effects, but rather limited, I would say. On the other hand, the prospects of growth for the second half of 2020 are, I mean, they are worsened due to COVID, because total activity on the market is much lower than before. So that is something we have to relate to. And as I said, in extension, this has led to some uncertainties regarding especially the timing of our financial targets. On the other hand, if we look beyond COVID, we still believe that this situation that has been for many years now, that demand of IT services outweigh the supply, it will come back, because the digitization process that is underpinning demand, I mean, that has only started. And the lack of IT resources, of people knowledgeable in IT, that's a structural problem that hasn't been solved. And also, we are opportunistic enough to say that, well, COVID also in the short term may bring some opportunities for us. For example, a lot of our competitors have suffered quite hard because of COVID, and we haven't. So relatively, we have a stronger position on the market now than before, we believe. Also, when the market bounces back, maybe from a really low activity to slightly higher, that will give us opportunity to put a foot in the door at new clients, which we'll be able to benefit from later on. COVID has brought a widespread adoption to remote collaboration. Almost all companies are really used to remote collaboration, and that we think will benefit us a lot when we are trying to convince clients to work with our full system maintenance offer, because most will see the advantages, but some will be a bit skeptic about will it really work, working remotely and so on. That is I would say is gone with COVID. Everyone knows that will not be a problem. And last but not least, we expect that we will see opportunities for acquisitions in the near future, and we are geared for doing acquisitions. We have an overhead in the group that we will be able to handle 3, 4, maybe 5 more companies with only marginally extra cost. So that is also a thing. And when those opportunities show themselves, we will be really quick to act. That was actually what I had to say about Frontwalker Group today. So I will leave it to you, Lars, to wrap it up.
Okay, Thank you. I don't know how about timing, but I think we have some minutes to go, and questions, of course. Yeah, we just published the quarterly 2 report, and that is the second report for more than 10 years that this group ever have shown a profit at the bottom. So 2 quarterly reports in a row, despite the virus effects on the market. So I'm very happy that we already 2019, before we knew anything about this, took this decision to create the 2 consolidated groups, Frontwalker Group and Apnor Group. They are totally independent, its own management, and are operating its different targets. And I think it's important also to notice all numbers we have said here has also been published, including the financials for forward-looking numbers, if you read our published material. And I think really the most important page is page 25 in the quarterly report, because that's the segments. In this case, the segments are totally legal entities with its full resources, and the mother company has been stripped down on every operational assets. It has been pushed down, and it's a pure owner company from 1st of January this year. Then you see profit after financial targets, Frontwalker Group, and it goes in line with the numbers that Torbjörn was talking about. This business is, as we said, rather mature. Therefore, we are optimizing operation and earnings and dividend. You don't bind many dollars in capital, so you can divide it out every year. And that's why we have consolidated that in one group. That is easy to measure. Apnor Group is a developing company. We have put in a lot of resources up to now, and they're now on black numbers, also for the first time since we created this 5-6 years ago. And the reason to keep 100% ownership is, of course, that you go with the profit cash flow from the consultancy business, and you can finance your product development cost. And that's why in total, Empir Group has not been very successful in terms of generating free cash flow, because we have poured that into our developing business, which is now ready and it's outselling and it's catching up, and you will see this growing month for month and quarterly report. At the same time, we have the shared cost, the mother company cost, the cost of being listed, the cost of me, who is not needed any longer, so to speak, in the operation. And we are trimming that down even further to a minimum cost. So we have 2 different strategies for this now. We had a strategy for Empir Group that has been communicated 2016. That we said we are going to expand from 30 million SEK to 500 million SEK, mainly through acquisition. And now we spread this out and we say, hey, these guys can do it organically. They have enough material. They know that they can manage it. And they are then doing mainly organic and high dividend strategy. The development we have done here, we can continue doing, because they are now self-generating its own cash flow for keeping up its product line, mainly one telecom product line and one fleet management, as I said. And we are stripping down the operational mother to be just an owner and looking after this and make sure that we starting a successful dividends policy. We started for the first time to pay dividend from Empir last year. The board decided for a dividend even this year, but then Corona said, okay, because we still think we are able to deliver, we did not push forward for a dividend. But that might change when and everyone else are looking on this issue. But what I would try to say is that since 1st of January 2020, the last 6 years of work is now coming out to daylight in terms of these two units, and you can follow it best by looking here on the segment reporting. So a quick word around Exavitec, which is an empty company, so to speak. It's listed on NGM list, and the main asset is 49% ownership in Frontwalker. It's the only asset. And as you understand, of course, is that over time, Frontwalker will consolidate in Exavitec at some point, and keeping the consolidation more than 51% ownership up here, and therefore it will be part of it. And there is many reasons for this. Liquidity-wise, it's of course better because as we can pay out dividend more rapidly in this company than we can do up here, and higher dividend. And we don't need the cash flow over here, as we have done historically. So now we have two subgroups, and they are self-propelled forward. And we get dividend up here, and we have a very slim operation up here, so we pay out most of that dividend to our customers. So we can restart dividend, hopefully next year, latest for Empir Group.
Thank you, Lars and Torbjörn, for that presentation. I think we're running a bit behind the schedule, so I will be short. But Torbjörn, you talk a lot about being a more strategic partner to your customers, and your full system maintenance offer stands at 35% of the business revenues today. Where was it, say, like 3 years ago, and where do you think it will be 3 years from now?
I don't have the exact numbers. 3 years ago, Frontwalker Group didn't exist in its current configuration, because if you know the history, this company was kind of brought up within Empir Group, and we formed Frontwalker Group as only 1 year ago. So I don't have the exact numbers if we're looking back, but it was say 35%. Maybe it was 20%. That's my best guess. And if we look forward, I think it will. I mean, half would be, or let's say 45, 35. I think that is because there are a lot of clients that we will never be able to convince that this is a good idea of delivering this kind of services. They are totally geared for on-site consultants because they want to supervise their consultants and they want to learn from consultants and so on. So we will always have that part of the business, but the combination is really strong to have.
And you also mentioned that you have higher margins in that part of the business, and that you currently are at around 10% EBIT margin. Do you see a potential to go even higher than that, or is that sort of a ceiling or aim?
Yes, I do. I think if we really manage, we can do that. But it's difficult to do services in this kind of way. I mean, that's why not everyone is really focusing on it. But I know from experience, because I've done this before in other settings, that you can have really good margins this way.
Okay, perfect. Then I would like to thank you again, Lars and Torbjörn, for coming here and present for us today.
Thank you for listening.